Hey y'all, this is Carla Carter. Some of you know me as Carla Boston, the owner of TBA, the Boston Agency LLC, all of that good stuff. This may be a long video. I'm gonna try not to make it long, so I'm gonna do a whole bunch of information real quick. The new tax law changes and things like that. My suggestion strongly is to not spend a whole bunch of money on the holidays and things like that. Think I'm gonna get these big refunds like we did for the last 2 years because it's not going to happen. The refunds will be significantly lower for several different reasons. I'm gonna try to go through some of them real quick. But the tax law changes and things like that for tax year 2022 filed in 2023. Let's go through those real quick. First of all, the standard deductions have increased for a single or married filing separately. I think the standard deduction is 12,950. Head of household is 19,400. For married filing jointly and widower, it is 25,900. So the standard deduction has gone up a little bit higher. Those go up every year. All right. So then there have been some credits that have been moved around to from refundable to non-refundable, so forth and so on. So pretty much basically in a nutshell, the tax law changes have been that the rules go back to the tax year 2019 that was filed in 2020. If you remember in the 2017 for tax year 2018, there was something called the Tax Cuts and Jobs Act that the Trump administration did to make a lot of different changes to the tax law. Some of the most significant changes since 1986, I think it was. And so those rules go back to applying for the 2022 tax year filed in 2023 for the refundable and non-refundable credits. And what that means, just real quick, just kind of give a brief overall of what that means. A refundable credit versus a non-refundable credit. So a non-refundable credit is a credit. Say for instance, the credit is $1,000 and it's non-refundable. A non-refundable credit only goes towards your tax liability. So say you make a certain amount of money for the year, your adjusted gross income is blah blah blah, the taxes owed on that income say is $500, and say the credit is 1,000. Well, out of that $1,000 credit, only $500 of that is applied to the tax liability of 500, and the other 500 left over, you forfeit. It does not go towards your refund because it's a non-refundable credit. If it's a refundable credit, say for instance the same scenario, your tax liability is 500, the refundable credit is 1,000. 500 of that 1,000 goes towards the tax liability, and then the other 500 goes towards your refund because it's a refundable credit. So that's pretty much in a nutshell what a refundable and non-refundable credit is. All right, some of the refundable credits are earned income credit, child tax credit, additional child tax credit, American Opportunity Credit. Part of that is refundable. The American Opportunity Credit, which some people call the college credit, is $2,500 credit is the max, but out of that 2,500, only 1,000 of it is fully refundable. All right, the other 1,500 is non-refundable, but that's too much to explain. Okay, so and then 2021, the dependent care credit that's filed on Form 2441, that used to be a non-refundable credit, but they made it fully refundable in 2021 that we filed this year in 2022. That's going back to being a non-refundable credit, and I'll talk about that in just a second. Other dependent credit is also a non-refundable credit, which I'll go into that in a minute when we go to the child tax credit. The savers credit is non-refundable. Lifetime learning credit is non-refundable. So those are different non-refundable credits versus refundable credits. All right, so let's break down some of the changes to the different credits. Earned income credit. That one changed back. And so for 2021, if you remember, the age limit changed. So anybody, as far as like filing for, earning credit with no dependents. So say you're filing a tax return as a single individual, blah, 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 or married filing jointly, or even filing married filing separately. Well, no, not married filing separately. And the reason I say that, married filing separately, you don't qualify for earning credit anyway. So single or married filing jointly, if you have no dependents for 2021 tax year filed in 2022, the age limit went from 19 years, if you were 19 years old by December 31st, 2021, and there was no age cap on it, and you had no dependents, if your income was, I think, 21,000, blah, 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 or less, then you would qualify for the earned income credit with no dependents. And the maximum credit, I think, was like $1,500, $2, something like that, whatever. It changed back. So now the age limit is 25 to 65. And so if you were that age 25 by December 31st, 2022, or 65 by December 31st, 2022, and you have no dependents, if your income is, if you're filing single or head of house, whatever filing status you're filing, other than married filing separately, if your income is $16,480 or less with no dependent, then you still qualify for earned income credit, but the maximum credit is only $600. And then if you're married filing jointly with no dependents, and you're in that age group, the maximum adjusted gross income is $22,610 altogether. All right, so that changed. Also, we'll talk about that when we get to the delays anyway. So the child tax credit. All right, so child tax credit reverted back. They had changed the age to if you were under the age of 18 by the end of the tax year. It went back to being under the age of 17. So if your child turns 17 by December 31st, 2022, you will not qualify for child tax credit when you file your taxes next year. So they have to be 16 or under to qualify. In 2021, if the child was 0 to 5 years old, then of course it was a $3,600 credit for the child tax credit, so forth and so on. If they were 6 years old to 17 years old, then it was $3,000 for the child tax credit. That has dropped down to $2,000 per child. And in 2021, the whole credit was fully refundable. No matter if you had zero income, you still got the full credit. And there was no limit on how many children you can get the credit for in 2021. That has changed and gone back. And so for 2022, that we're filing in 2023, if your child is under the age of 17 by the end of 12/31/2022, and your income is over $2,500, then you will qualify for child tax credit, additional child tax credit, blah, blah, blah. But the credit is $2,000, and the maximum refundable credit of that $2,000 is $1,500. It does not mean that you get $1,500 per child. That is not what that means. What that means is whatever amount of your adjusted gross income that is over the amount of $2,500, whatever that amount is, you would get 15% of that amount towards that credit, the $2,000 maximum credit. And say, for instance, if your adjusted gross income is $2,600, only $100 is over the $2,500 amount. So for child tax credit, you will get 15% of that $100. And so your credit is only $15 for that child for child tax credit. It does not mean that you don't qualify for earned income credit, because you still will get earned income credit for that child, depending on your income. But for child tax credit, though, it is 15% of whatever your adjusted gross income is over $2,500. And so that is going to be a big difference. And the max you can get for the first two children is $1,500 per child. The third child is, I can't remember what the percent is now. It's less than that. After the third child, there is no more child tax credit for any children more than the third child. You can have 10 children on there. You only get credit for 3. And not even full credit for the third one. So that's going back to the same way it was in 2019. Some of you guys are new to this motherhood thing, and this may be the first year that you file taxes for your child. There will be a big surprise for you when you file your taxes next year. So don't freak out. Don't leave your tax preparer's office saying, oh, they messed my taxes up. They got me messed up. They don't know what they're doing. I had got more back last year. No, that's not. And that might be true with some tax preparers, but that does not mean that your tax preparer don't know what they're doing. All right, so what else for child tax credit? I think that's it for child tax credit. Other dependent credit. Some people don't know about it. Some people do. This was changed in 2017 for 2018 tax year. So if for a qualifying dependent, as far as child tax credit goes, they have to be related to you a certain way. If they're not related to you, or if they don't qualify for a child tax credit, you still can get the other dependent credit. So there's other rules to that too. And that credit is non-refundable. The maximum credit is $500 per person. I think that's it on that. Dependent care credit. This year, 2022, when we filed 2021 tax returns, the 2021 tax returns made that credit fully refundable. And the maximum expense of the cost that you paid for child care for one child was $8,000, meaning the credit was $4,000 because you got 50% of whatever your expense was. and that $4,000 credit was fully refundable, meaning that whole 4,000, no matter what was going on, went towards your refund. Two or more children, the maximum credit, maximum expense, or what it cost you was 16,000, meaning the full credit, the total credit would be 8,000, fully refundable. Not even close. I mean, when I say not even close, not even close. So that has gone back to where it was before. But there's some changes to it though. So for that particular credit, it's non-refundable again, meaning that whatever the credit is, it only goes towards your tax liability. It doesn't go towards your refund. Anything left over, you forfeit. So it just kind of helps if your tax liability is higher than whatever. Anyway, so the way that works, the maximum expense, how much you paid for child care or dependent care, is $3,000 for one child, $6,000 for two or more children, and the credit is only 35% of whatever your expense was. So the maximum credit for one child, credit for one child is $1,050. The maximum credit for two or more is $2,100. And that credit, that you can get the maximum 35% if your income is 15,000, adjusted gross income is 15,000 or less. All right, so that's how that works. What else was it? Oh, the head of household filing status. So a lot of people still miss out on this one because they still don't know the changes, and some of the tax preparers don't either. I don't know how or why, but the head of household credit, it's not a credit, excuse me, filing status. This changed for the Tax Cuts and Jobs Act 2 end of 2017 for 2018 tax year. So say for instance you have John Doe and Jane Doe. They're not married, but they do have a child together. And they both take care of the child. They both have their own separate bills, their own separate address, blah, blah, blah. Jane Doe is claiming the child on her tax return. She's filing head of household. She's getting child tax credit and earned income credit for the child. John Doe also pays his bills at his house. The rule is now John Doe also can file head of household at his address and use the same child as a non-dependent but a qualifying child. So a qualifying child does not necessarily mean that they're a dependent. And so Jane Doe can claim the child as a dependent, head of household, all that. And John Doe can still list the same child on his return as a non-dependent, saying that he's not claiming the child for the child tax credit or earned income credit, but he still can get the head of household filing status. Remember, the standard deduction for head of household is more than it is for single. And so this can help John Doe actually get more back on his taxes depending on what his income is, blah, blah, blah. What else was it? There's no more above the line charitable contributions that you can take. Like, remember the $300. If you're not going to itemize, you have to itemize all your charitable contributions now. For businesses, meals are 100% deductible now. The mileage, the amount that you get for miles, that did increase. So from January to June, I think it's 58.5 cent per mile. And then from July to December, I think it's 62.5 cent per mile from July to December, because of course the fuel prices went up. And so it still may be more beneficial to claim mileage versus gas. But don't forget, if you started out already with your business claiming miles, then you got to keep it that way. If you already started out doing gas, you got to keep it that way. You can't switch it up, blah, blah, blah. All right, but just so you guys know. Okay, what else? There is no more 2020, I said 2020, 2019 look back credit. So, for the last 2 years, you were able to use your 2019 income. If you made more in 2019 than you did 2020 and 2021, you could use that income to help you get more back for earned income credit or child tax credit. That's gone. There is no more 7202 COVID relief sick leave for self-employed individuals. That's gone. There was no stimulus payments in 2022, so there's no recovery rebate credit, so that's gone. So that should kind of minimize some of the delays, but there will still be delays, and I'll tell you guys why in just a second. I'll warn you guys about the delays and the audits. Oh my goodness. Virtual currency. There will be a question on the tax returns. You have to, your tax preparer will ask you if you bought, exchanged, received any rewards, blah, 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 for virtual currency. You have to answer yes or no. If you purchase virtual currency with your regular, money, whatever, and that's all you did was purchase it in 2022, you do not have to report that. But if you sold, exchanged, transferred, whatever, received for goods, services, whatever, then you do have to report that as capital gains or losses, because virtual currency is considered property, and so you have to actually still file that on the schedule. I mean, a 1099B, capital gains or losses or whatever. So that is something that you guys, because I know you got a lot of guys are doing like cryptocurrency and Bitcoin and all the different stuff like that. So you do have to report that on your tax return if there were any exchanges or sold any of it, whatever. Make sure you know if it's short term or long term. Keep up with that. The 1099K. If you received more than $600 in the whole year of 2022 for goods or services on like Cash App, Venmo, PayPal, Zelle, things like that, you possibly are going to get a 1099K. You're supposed to anyway. Get a 1099K from those different places or whatever. Now, if it's a personal account and it was just money that somebody was sending you for this and that, you won't get a 1099K for that. But it's only if you received it for goods or services. And then for rents as well too. So be on the lookout for that. Some of you guys may get a 1099K from if you were using Cash App, PayPal, Zelle, Venmo, things like that. So be on the lookout for that too, because if you received over $600 for the year, you will definitely get a 1099K. But there's some other things that are applicable, so make sure you kind of know, get with your tax preparer and kind of know if you're going to get one or not, or if you should get one or not. Kind of talk with your preparer about that. What else was it? Oh, the educator expense went up from $250 to $300 for you educators. That deduction is still available, but it went up $50. Let's see. Oh, the new like the clean vehicle credit for like the electrical vehicles and things like that. The new credit will not apply until 2023 tax year that we filed in 2024. So the rules still apply for that for this year. But if you put a charging station at your home and things like that, you can still get I think a maximum of $1,000 credit for that. I think it's non-refundable though. For electrical vehicles, if you are claiming an electrical vehicle on your tax return for this year, if you purchased it after August 16th of this year, then it has to have been the final assembly of it had to have been done in North America to get that credit. But if you purchased it before then, no big deal. You still can actually claim and get the credit. But if you purchased it after 8/16/2022, then it has to have been finally assembled in North America. What else? April 18th is the filing date, deadline for 2022 tax year. What else? I think that's it. Audits and delays. Okay, let's do this real quick and I'll be done. So, if you guys remember, I don't know if you remember or not, but Congress did pass a bill and they gave the IRS a whole bunch of money, millions of dollars, to be able to hire more people to do more audits. So a lot of audits will be out this year, whatever. So make sure if your preparer offers it, go ahead and get audit protection, so you don't have to worry about trying to deal with it yourself. Somebody that knows what they're doing can actually deal with that audit for you. I know we have that available for our clients, and we actually do it for other tax offices too. We have a whole department that does that. We handle the audits for you on your behalf of your company as your company. But anyway, whole other story. So be on the lookout for that. So to avoid audits and things like that and delays, make sure that you're not filing too early. And this is how it works. So like say for instance, we open January 2nd to start doing returns. And say for instance, you file too early, right? Or say you had 3 W-2s for the whole year and you filed 2 and you forgot about that one. Even if you only make $40 on that W-2 that you forgot, if the IRS has in their system that you're supposed to have 3 W-2s and when your tax return comes in, you only have 2 on your tax return, then it could possibly send your return to the errors department, because it's initially, they're not people that are there just doing audits. They have created the system to catch errors and mistakes and, crack down on fraud. And so if a return comes in and all of your income is not on it, or your income, any information is incorrect, it'll actually run it through the system to see whatever it's supposed to be. And whatever it's supposed to be, if it does not match, it goes to the errors department. that means somebody manually has to actually process your return. You have millions and millions and millions and millions and millions of returns that these heirs departments get, so it may take months before your return is actually processed. And so please, if you can avoid filing too early, do not file early unless you have all of your tax documents to file. Because if you don't have everything on your return, it will delay your return. Another thing too, they are cracking down on a lot of fraud. Something could trigger it, as if, maybe your address changed, or if last name changed, or different whatever. Something can trigger it to make it seem like it's a fraudulent return. Or if you have your W-2 from your company or you're self-employed, whatever, and say for instance you work for ABC Company, and ABC Company gave you your information, but they have not processed it with the IRS yet, or turned in the information to the IRS, W-2 information to the IRS yet. It won't be in the IRS's system how much the ABC Company paid you. So when your return goes into the IRS and it goes through the system, it does not match in the system what it's supposed to be. Or if you have a dependent on your tax return that has a different last name than you, or you have not filed that dependent, even if you normally file this dependent, the system has been updated. So if you don't have the same last name, if your address on the return is different than their address on their Medicaid or food stamps or whatever, just different things can generate an audit or cause a delay. For some of you guys to keep crack down on the identity protection delay, my suggestion is strongly to everybody is to go to irs.gov. If you make under $72,000 a year, go to irs.gov and go ahead and apply for an IP pin, an identity protection pin, and you can get that offline. You can get it online. And when you file your tax return, once you put that PIN number on your tax return, when it's time to file it, that'll cut down on the delay, because the IRS will know and recognize that this is your return. They don't have to question it or anything like that. It's not fraudulent because it has an IP pin on it. That's my suggestion. But anyway, we open January 2nd. If you guys have any questions, you need any other answers to anything else, you could always email us at client services, S on the end of service, at tbastaff.com, T as in Tom, B as in boy, A as in apple, tbastaff.com, or tbataxgroup@gmail.com. Either one of those emails will work. You can go to our website, tbathebostonagency.com. You can send questions in that way. If you want to book an appointment just for a consultation or a tax planning session or whatever, those are all free. You can go to the website, tbathebostonagency.com, click on appointments, book that appointment. I also have the appointment link to click on down below this video. What else is it? So we will do the same thing that we've been doing. So tax appointments for preparing the taxes, it'll still be virtual. Monday through Friday appointments only. Saturdays walk-ins only. I'm going to try to be in the office on Saturdays for the walk-in appointments. Can't not guarantee it. But all the other appointments, Monday through Friday, those will be virtual still on Zoom. And then what else is it? So you don't have to download the app this year. It'll be a link that either we'll send you, or you can actually download. You can click on the link on our website, whatever. I haven't put it up yet, but you better click on the link and just upload your information through the link instead of having to go to the app and do all the stuff through the app. It'll still come to me directly, but we'll do it that way. This should make it easier for you guys to send your stuff in instead of having to do a whole bunch of extra blah blah blah. Or you can come to the office and they can scan it in that way. So either way, whole bunch of different ways to still file. Advances start on January 2nd too, the day we file. We start the advances on that day. I can't think of anything else. I don't remember. But anyway, those refunds are going to be a lot less this year. So please be prepared for it. We'll try to do some things to help you out, but we can't do anything against what the law says we can do. I would strongly advise you guys not to file early if you don't have to. I know some of you guys want to do the advance. So see if you can actually get with the preparer that we can do the advance without actually using your W, like you can use your check stub to do an advance. You can do that. And when your W-2 comes in, go ahead and finish filing the right way to keep down any of the delays. All right. If you guys have any questions, hit me up. Let me know. If you got my cell phone number, call me, text me. Hit me up on Facebook, whatever. I'll try to get the questions answered as much as possible. But that's pretty much it. If anything changes, some of these things can change. So I will come back again towards the end of January and let you know if anything changed. But that's what it is right now. All right. Sorry, this is a 25-minute video. Goodness gracious. All right. Love y'all. Peace.